tax loss harvesting, and the mystery of disappearing basis. Hi, this is financial planner Sean Mullaney. Let's discuss. So the stock market and the bond market are down this year, and guess what? Everybody's interested in tax loss harvesting. There's one major governor on tax loss harvesting, and it's referred to as the wash sale rule. What the IRS is trying to prevent is selling a stock or bond or mutual fund or ETF, a security, and then quickly in time, either before that sale or after that sale, repurchasing the same or substantially identical stock, bond, mutual fund, ETF. All right, so let's just say, I had 10 shares of Apple stock. I've got a built-in loss. Day one, I just sell them, take that tax loss on my tax return. But then day two, day three, day four, I rebuy them back. At the end of the year, I still have 10 shares of Apple stock. Why the heck did I get to take a tax deduction with respect to a loss in Apple stock? That makes no sense. So this wash sale rule works to sort of police. I can't just sell and then rebuy and still claim a tax loss on my tax return. That makes a lot of sense. In order to make me whole in those transactions over time, as they say, well, we disallowed a tax loss you had. So in the future, if you sell those repurchased shares, we'll give you a basis adjustment. We'll increase the basis you have in those shares for the previously disallowed loss. This makes sense, right? It makes me whole over time. I have a disallowed loss when it's not appropriate to let me take the loss, and then I get a basis adjustment later on, and my taxation sort of works. Okay, great. Now, there's a wrinkle to the wash sale rule, and it's retirement accounts. Years ago, there were people who thought, well, you know what I'll do to get around this wash sale rule? I'll just do the repurchase in a retirement account. And in late 2007, the Internal Revenue Service came out with something called Revenue Ruling 2008-5. I'm going to link to it in the description below so you can read the notice or the revenue ruling. And it says, look, if you do a repurchase of the same security or some substantially identical securities in a Roth IRA or traditional IRA, the wash sale is still going to apply. Okay, so you will still have that loss disallowance even though the repurchase wasn't in your own taxable account, it was in your Roth IRA or traditional IRA. And, I'm not 100% sure the IRS is correct in that interpretation. I think it's a little bit of a stretch from where the Internal Revenue Code lays out the wash sale rule, but I certainly wouldn't advise anyone to challenge the IRS interpretation. They cite to two 1930s cases that involved individual taxpayers and controlled corporations that they controlled. So it's related, but it's not exactly on point. So I think the IRS is stretching maybe just a little bit, but I would bet that most courts, if not all courts, would agree with their interpretation as to the loss disallowance under the wash sale rule when the repurchase occurs in a Roth IRA or traditional IRA. All right. Well, what about that basis adjustment I previously referred to that makes the system sort of whole? In this revenue ruling from the year 2008, they've got this one sentence in there that briefly talks about it. And it says that the taxpayer's basis in the individual retirement account or the Roth IRA is not increased by virtue of the relevant wash sale rules. Okay, so that's interesting. Notice it doesn't exactly tell us that the basis vanishes for all tax purposes. All it says is that the taxpayer does not obtain basis in their Roth IRA or traditional IRA. I think as far as that goes, that makes sense not to attach basis to a retirement account. But does that mean the basis vanishes entirely? And that, to my mind, is the mystery here. And I'm not here to say that we have a definitive answer, but I have a theory that I think could solve the mystery. I think what you have to look at is what happens in that taxable account after that first sale. So let me give you two hypotheticals, and I actually have these hypotheticals in a blog post that I'll also link to in the description below so you can see it on paper. So let's just say you own in a taxable brokerage account mutual fund A, okay? And what you do is day one, you sell mutual fund A for cash. and you use that cash to fund your living expenses, the cable TV bill, dinner, heating and cooling in your apartment or your home, travel expenses, those sorts of things, right? So use them for personal expenses. Then on day 2 or day 3 in your Roth IRA, you rebuy the same number of mutual fund A shares. Okay, that's one example. What about if we flip that example just a little bit? We say on day 1, taxpayer takes their A mutual fund shares and exchanges them for B mutual fund shares, and B is totally different, right, from mutual fund A. So that's day 1. And then day 2 or 3, the taxpayer in their Roth IRA repurchases A mutual fund shares in that Roth IRA. Okay, so now let's think about the basis adjustment in those 2 examples. I think in the first example where the taxpayer takes the cash out of the taxable brokerage account and uses it for personal expenses, I think a court is probably going to say, well, the cash did not remain invested in a capital asset inside the taxable brokerage account, so the basis adjustment does vanish in that case. Okay, it goes for personal expenses. We're aware personal expenses are not tax deductible, right? I don't get to tax deduct my Dodger tickets or my Jets tickets or whatever I spend for my personal life. Okay, fine. But what about that second example, right, where the taxpayer reinvests in a capital asset, a different mutual fund inside their taxable brokerage account? I think there it's appropriate to have the basis adjustment attached to that mutual fund B, to those shares. I think it's appropriate to allow that basis adjustment to survive so that our taxpayer is made whole over time. If the basis does not attach to those B mutual fund shares, now the IRS is having its cake because it's getting loss disallowance, and it's eating it too, because it's not allowing a appropriate basis adjustment. And I think, there are going to be some judges out there who would look at this and they'd say, IRS, you're stretching just a little bit by using the wash sale rule to disallow the loss here on the first sale, right? We're going to give you that stretch. You're stretching just a little bit. But you know what? From considering the policies at hand, we'll give that to you. So we'll agree with the primary holding of Revenue Ruling 2008-5. Wash sale rule applies when you make the repurchase in a Roth IRA. We'll agree with that. But what's good for the goose is good for the gander. And so the taxpayer now gets to stretch just a little bit when they say they get a basis adjustment in the B mutual fund shares that they bought by reinvesting the proceeds. In this case, it's an exchange. It could be they get cash and then a couple days later they reinvest. But essentially, the A shares go into B shares. It's a reinvestment of that capital. The basis adjustment should be preserved in those cases. I think there are going to be some judges out there that say, look, if we're going to give the IRS a little bit of a stretch on the first sale and the loss disallowance, we ought to give taxpayers a little bit of a stretch to get that basis to attach to reinvested securities that are capital assets to the taxpayer. So that's my theory of how this mystery gets resolved. Of course, this has never been litigated to my knowledge, right? So that's just a theory. And of course, it's not legal analysis for you or any other person to apply to your particular facts. Talk to your lawyer, talk to your tax advisor. But I think this mystery of the disappearing basis can be solved through some appropriate basis adjustments if and only if investors keep the money invested in a capital asset in a taxable brokerage account. Do you have any thoughts on the wash sale rule and the unsolved mystery of disappearing basis? Let me know in the comments below. If you like this video, please mash that like button and subscribe to my channel. I'll see you next time.